Most trend indicators suffer from one fatal flaw: lag. By the time they tell you the trend changed, you've already missed 30% of the move. And that's exactly why this accurate indicator changes everything. It uses logarithmic transformation to convert price into a Gaussian distribution, which naturally amplifies turning points before they happen. In this video, I'm going to reveal this indicator to you, the best settings across any market, and 3 strategies you can start using today. Let's get into it. To add this powerful indicator to your chart, first, head over to TradingView and pull up any chart you want. I'm using the 1-hour time frame on GBPJPY, but this works on any market, any time frame. Click on Indicators and type in Fisher Transform Trend Navigator. Make sure you select the one by QuantAlgo. Now, this isn't your typical trend indicator that just follows price with moving averages. This one uses advanced mathematical transformation. Let me show you how it works. It takes recent price action and scales it to a bounded range between -1 and +1, using the highest and lowest prices over your Fisher period. Then it applies the Fisher Transform calculation, which amplifies price extremes and turning points, making reversals easier to spot before they fully develop. After that, it smooths this Fisher output with an EMA and combines it with a base trend line to create a hybrid signal. And finally, it adds dynamic threshold bands using ATR-based volatility measurements. So when price momentum pushes through these thresholds, the trend line locks on to the new level and maintains direction until the opposite threshold is breached. However, trading like this with just one indicator is how accounts get blown. Plus, you'll miss 70% of the best setups because they happen while you're at work or asleep. That's why we trade with fully automated strategies that have proven multi-year performance across every market condition. This is exactly how traders consistently hit their targets, whether passing prop firm challenges or scaling cash accounts. The best part, experience level doesn't matter. The strategies work regardless if you're a beginner or veteran, as it's automated, helping traders achieve their goals without being glued to screens. We work with a limited group of 30 traders each month to ensure everyone gets proper guidance and setup support. If you want to see how these automated systems perform in real market conditions, click the first link below. Now, before I show you how to trade with this, let's get your settings right. Double-click on the indicator to open the settings panel. First, you'll see 3 preset configurations available: default, scalping, and swing trading. Default is balanced for most traders and time frames. Scalping preset gives you faster response with higher sensitivity, perfect for 5-minute to 15-minute charts. And swing trading preset adds enhanced smoothing and slower response, ideal for 4-hour to daily time frames. But if you want manual control, here's how each parameter works. Fisher period controls the normalization window, how many candles the indicator uses to scale price. It's set to 14 by default. For scalping, drop this to 8 to 12 to catch quick reversals. For swing trading, raise it to 20 to 30 to filter out short-term noise. Under the Style tab, you've got 4 color schemes: Classic, Aqua, Cosmic, and Custom. Pick whichever makes the signals easiest for you to read visually. You can also toggle candle coloring on or off and adjust band visibility. After that, click OK. Now let me show you 3 ways to trade this indicator, each using the mathematical edge differently. Strategy 1 is trend following with Fisher candles. This is the cleanest approach for catching sustained moves. Watch for the candle color to change. Green candles indicate normalized price distribution, favoring bulls with sustained buying momentum. Red candles show distribution favoring bears with selling pressure. But don't just enter on any color change. Wait for confirmation that price momentum has pushed through the threshold bands. When you see the trend line lock in one direction, meaning it stays flat or slopes strongly without flickering, that's your signal. Enter on the first new colored candle after the threshold breach is confirmed. Place your stop loss at the opposite threshold band. For profit targets, ride the position until the candle color changes back. This strategy catches the meat of trends because you're in as long as the statistical distribution remains favorable. Strategy 2 is mean reversion from the bands. This strategy exploits the Gaussian distribution principle. That is, prices that reach statistical extremes tend to revert to the mean. Watch for price action in the upper band zone. This area indicates elevated trend strength, essentially overbought conditions in probabilistic terms. Now when you see green candles start appearing in this upper zone, wait patiently. The moment candles shift from green to red while still in the upper zone, that's your short entry. The normalized distribution just flipped from bullish to bearish at an extreme level. Enter shorts targeting the middle trend line as your first target. Place your stop loss just above the recent high. This strategy has excellent risk reward because you're entering at extremes with clear structure. Strategy 3 is trend lock confirmation. This advanced technique uses the threshold breach mechanics. The indicator's trend line locks when the upper threshold falls below the trend line for bearish, or the lower threshold rises above for bullish. This represents strong directional momentum where the volatility bands can't keep up with price movement. When you identify a trend lock, enter aggressively in that direction. Use the opposite band as your stop. Hold the position until the lock breaks, which happens when the trend line starts flickering or the candle color changes. These trend lock periods often produce the biggest, cleanest moves because they represent strong institutional conviction. Quick reminder before we move on, you just learned a very powerful strategy. But here's the reality. You can't execute all of them manually while living your life. That's exactly why our community of traders automate strategies like this. So they're catching every signal across every market, whether they're at their desk or not. with complete frameworks handling entries, exits, and risk management automatically. The difference? They're trading systematically instead of hoping they catch the next setup. And if you want to see how these strategies run on autopilot, don't forget, first link below and join our trading community today. Now, different market require different settings for the most accurate signals. For forex pairs, use the default preset as your starting point. Keep Fisher period at 14 and volatility multiplier at 1.5. These settings work best for major pairs like EUR/USD, GBP/USD, and USD/JPY. Focus your trading on London and New York session hours when liquidity is highest and the statistical transformations are most reliable. For crypto, reduce your Fisher period to 10 and increase Fisher sensitivity to 0.8. Crypto moves explosively, so you need faster response from your normalization window. Also, bump volatility multiplier to 2.0 to create wider threshold bands. This prevents false threshold breaches from crypto's erratic price spikes while still catching the genuine momentum shifts. For stocks, increase Fisher period to 20 for cleaner signal generation. Use the swing trading preset if you're holding multi-day positions. Keep volatility multiplier at 1.5 as stocks have less intraday noise than other markets. For gold, set Fisher period at 12 and increase volatility multiplier to 2.0. Gold exhibits violent swings that can trigger false threshold breaches if your bands are too tight. These settings keep you out of the whipsaws while catching the real directional moves. Also, for gold specifically, only trade strong trend lock setups and ignore simple candle color changes unless the trend line has fully locked in one direction. This single rule will keep you out of gold's notorious false breakouts. Thanks for watching and see you in the next one.